Hello, I'm Steve Lentz with Discover Options. Welcome to the Prepared Mind. Today we will discuss the S&P 500 Condor Butterfly Timing Report for Monday, May 2nd. If this is the first time you're joining us, please consider subscribing by clicking on the button below. We'd love to have you come back. This is going to be some great information you'll want to return to time and time again. All right, page 2 here. All right, the text version of the Prepared Mind is found by going to the Discover Options website, clicking the blog link. Frank Fahey does a great job of giving you great information, and in that long presentation, you'll find a lot of information regarding earnings, including a candidate list for calendars. Double calendars regarding earnings reports coming out soon in terms of this week even. Okay, and you can kind of see just a little abbreviated list here, but believe me, there's several hundred candidates for you to select from. Okay, also, you can go to our website by clicking on the link in the upper right, and you can go to our website and download this book that Jim Graham and I co-authored, Simple Steps to Options Trading Success. I think you'll find it very helpful. The current technical condition of the market looks just like this, and we're going to reference this later on when we determine if this is a good time to put on condors and butterflies. But this is the technical condition where the high is lower than the previous one. Friday's low is lower than Thursday's. We're above the 50-day moving average, and the stochastic is moving down, yet is between 40 and 70. Okay, that is a market technical condition that we're going to reference, because later we're going to go back and see how often that occurred in the past and what happened and whether they were good for condors and butterflies. Let's get to the timing report and the theory behind it, okay? This is something we've just started rolling out in the last month or so, and we begin by looking at how much the market has actually moved. All right, and we create an indicator called the 21-day actual percent move. Now, we don't know yet from Friday how much the market's going to move in the future, so we can't draw the line. We can't really tell, and that's why the red line stops about 3 weeks ago. But if you go back all the way to February or so, you can kind of see where that low there. From that close, moving forward 3 weeks, 21 days, well, it would be, no, that's a month really. It would be 4 weeks. Excuse me, 4 weeks. I'm thinking 30 days, 21 trading bars. It moved roughly about 11% or so. 11%, and that's why you see that red line there. Move forward into the future, late March. From these closes, the market really only went up or down a max of maybe, looks like about 3.5%. You could see the ensuing channeling going on right there. So we create an indicator indicating the actual move. Now, here's a question. What was the implied volatility of the options back then during those periods? And that's what we're going to take a look at. There it is. This is the implied move of the market. The implied move. We have the actual move, and then we have the implied move coming from the VIX. Actually, we adjust for the skew to create a more precise number. A little bit about that later. But take a look back in February, where you had the actual move of at about 11, yet the implied move was down there at about 8. So as of this bar, that would have been a terrible time to put a condor on or a butterfly and sell premium, because the market moved far more than what was being implied. Yet if you go over here to March, you'll see clearly a beautiful season where the implied volatility was at 4, and yet the actual move was down there under 3. So basically, whenever the implied is higher than the actual, as it turns out, well, those would be very favorable bars to trade butters and condors in. So we're going to paint those bars blue, and we're going to paint the more nasty bars, the ones that had more movement ensuing than what was implied, we'll paint those red. Okay, now hope you're tracking with me here. So since January of 2000, what percentage of the bars have been favorable for selling premium? Okay, we can measure that. And when you go back and you look all the way back to January of 2000, roughly 2/3 of the bars have been favorable for selling premium, meaning that the implied volatility was higher than the volatility that actually came to pass. 1/3 of the bars had ensuing volatility greater than what was being implied. All right, so that is our benchmark that we're going to work from. We want to try, so randomly you could get you could just flip a coin, basically randomly, 2/3 of the bars are going to prove favorable in the S&P 500 relative to what's being implied by the options. Now, of those bars which align with our current technical scenario, what percentage are favorable or blue? Remember, we looked at our technical scenario before, okay? And it looked like this. Okay, we had a down, we had a down swing. We're above the 50, but the stochastic is coming down. Okay, we're going to take a look at each one of those going all the way back to January of 2000 and make some conclusion. But first, I want to alert you to our website, discoveroptions.com. You could call us or check the website out. We have a beautiful continuing education program for you to dip your toe in the water to see what we're all about. I have a wonderful set of inside wire presentations I do every Wednesday. Every Tuesday at 11. Tuesday at 11 at Central Time, and I've archived 300 to 400 of those with research very similar to what you're seeing here today. Okay, you can give us a call there or go to the website and check us out. We'd love to have you come aboard, even just to dip your toe in the water and become a customer that way at first before you maybe think about mentoring and everything that we do. Here are the results. Ta-da! Okay, of all those bars that conform with what we have going on as a Friday, 71.8% of those are favorable for selling premium, condors, butterflies. 28.2% are not favorable. So this is an improvement. This is an edge of about 4.8%. Not too bad. Not too bad. There's other conditions that are better, but you know what? At least you know that you would be doing better statistically by getting into a condor butterfly now than if you waited. Okay, now this is a 21 bar butterfly. Okay, 1 month because we're coming off the VIX there. All right, maybe down the road we'll get to a 9-day, the VXST version. Okay, but I wanted just to alert you to that possibility and that inherent edge that we see going on right now. All right, here's an idea. If you don't want to do condors and butterflies, here's another approach we really like. It's a hedged bull put spread. Technically, it's bullish, okay? But here's what we're looking at. We have the VIX at 15.7 as of Friday. Okay, Friday the 29th. When you take the SIBO's skew, instrument that they publish, and you walk the VIX through that skew, you get an implied upside volatility of 13.6, an implied downside volatility of 17.8. And when you plug 17.8 into option view right up here, okay, and what you'll get then is a 1 standard deviation down at the 1970 put there in May. And what we do is a credit spread down there, okay, a credit spread, selling the 1970s, buying farther out of the money, and then we hedge that with a little bear put spread right there at the money. And you know what? When you analyze that, look at that. It looks beautiful. All right, on the upside, you're not going to lose money on the upside no matter how far it goes. And you want to make sure you do this for a net credit there, even if it's tiny, tiny. Okay, tiny, tiny's fine. But over time, you could see how this downside, if the market goes down, in time that hedge is going to kick in. And even just 10 days out, you could see across the full spectrum of the first standard deviation, basically 2 to 8% or so right there. Not too bad for just 10 days across that 1 standard deviation. So that's the trade idea of the day. Thank you so much for joining us. We'll be back next week over the weekend with the same report, Condor Butterfly Timing Report. Take care. I'm Steve Lentz. Thank you.